Yes, guys, so welcome to the next video. We're going to be looking at the second optimum entry that I look at on the charts. So for this one, it's going to be what I like to call a continuation mitigation block. So this is when price is obviously downtrending, but it seems to be pulling back quite often. And you'll realize this in the charts when you get this kind of price action. So you're going down, for example, it mitigates, then creates liquidity at the bottom, for example, mitigates, goes down, and again. You won't see this all the time, which is why it's my second type that I look for. But when you do see it, it's very, very successful because you've got that extra confirmation that, you've got this that's been mitigated already. And this could have been your first entry, to be honest. Now, when you want to get into the second entry, or if you never managed to get into this, it's what you want to see. Sell side liquidity taken out, goes down. This area confirms that we're still in the downtrend. Now, you might get some consolidation, wherever it might be. Liquidity might have been left right at the bottom. Then what happens? You've got this massive void that happens straight after that first mitigation. When that mitigation happens, usually on the lower time frame, there will be a beautiful candle, right, left, right open. This makes sense, especially when it's the wick off, because as we know with the Wyckoff or Wyckoff, whatever you, however you like to say it, we get a lot of this AR, UT, UTAD, break structure down, boom, and then you get a lot of price action is open, and this is what will tend to happen. You get to that second area of mitigation. You see this small candle that was left open with that liquidity void. That's exactly what we're going to be aiming for. So price will do this and go straight, or obviously after a long while, blah, 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 gets back up there and mitigate. And that's exactly what we're seeing right here. So price eventually will get there. And then of course you wait for your low time frame break of structure and everything like that. So this one, it's like a continuation of the first trade in a way, the first trade type that we look at, but this one is also very safe and yeah, works a lot of the time. Example is over here. So we knew that we were in a buy setup scenario. Reason for that, both technicals and fundamentals. And that's two things that you've always got to look for when you're confirming your trades. So technically it happened 3 times here, proving that order flow was very consistent at the time. So you see here, this order block right here, this black one, price rejected straight off. Then what happened? It tried to get past this area, but couldn't. Came back down right to this order block and rejected off. Tick. That's our first area. Then we got our actual break of structure above this point right here. So we got our actual break of structure above this point right here. Now, personally, I still would not enter this first time. Reason for that is because you're not entirely, you haven't been convinced that price is going to go above that until you get this break of structure. And that's exactly what happened with this high right here. Came back down. Look at that. Create liquidity. So this is referring back to our first setup, right? If you have a look at this one, look, liquidity, and came straight back to our point of interest. And what happened here? Exactly the same thing. Liquidity was right there. We confirmed our break of structure, saw that massive pull up, came back down into our order block, which was our point of interest. So that would have been my first official trade if I was monitoring this market, which I was. Then price moved forward. You get more liquidity to the top side. Then as price pulled back down, it didn't come all the way to this order block, but rather price proceeded. Moving on to the next day, we've got this Asian range that formed. If you remember about timing of day, Asian range. Came back down for what? This was for a London retracement. And that's exactly what we got. London retracement caused the fake out of the day. And then we got our mitigation of that second block right there. straight into the body. If it was me, I would have left my entry and stop loss like this. So to be safe, you could have entered from the body, for example, stop loss just below. Or if you want to have, if you want to be sure that you're actually getting into the trade and you're not missing it, first TP would be there, TP1. TP2, you're going to have to look at the higher time frame. Obviously, I've taken in a zoomed in look for this image, but there was obviously higher points of interest. We know that this was during London retracement, so that's going to be the low of the day. And then that moves up for New York. And that's when you start to see price propel forwards and move away from this entry. These types of entries are so accurate as well. Like I said, guys, please take notes when referring to this lesson right here. So call this the continuation mitigation block. Anyways, guys, take care. I hope you enjoyed this lesson, and I'll see you in the next one.